Welcome to Vantage Point Podcast, a podcast brought to you by NWR Communications and 92 Studio. This podcast is intended for education and entertainment purposes only and does not constitute financial advice. G'day and welcome to the latest episode of Vantage Point, where we delve into the leading minds, whether it's listed companies or investors in listed companies. And we're fortunate today to have two-term Brownlow medalist, dual premiership player, and leader of two AFL clubs in Chris Judd. And whilst Chris is most well renowned for AFL in his career, I've had the benefit of getting to know him quite well in the world of investing. And I found him to be probably one of the most thoroughly prepared investors. I almost find it intimidating in terms of catching up with him, not because of his AFL career, but because he's almost too smart in terms of stocks and makes me look a little bit silly. He knows everyone in the street. And it's really impressive in terms of what he's been able to do from AFL career into now launching a new fund called Cerutty Macro Fund, which we'll get into in a little bit more detail. So thanks very much for joining us today, Chris. It's a pleasure to have you in here. But first of all,
what a pump up, Simon!
Yeah.
Firstly, let's just listen to you pump me up for another 60 minutes.
I'm about to bring you back. I'm about to bring you back down. So, without being crass or offensive. You obviously played for 14 years. You were one of the most well-paid players. How did you go about in terms of building a portfolio? Obviously, property's been well spoken about, but how did you look at money? And how did you get into the world of investing?
Oh, look, I guess it started for me. I was interested in shares from an early age. I bought my first share with the old man when I was 16. And then when I moved to Perth and got drafted by West Coast Eagles, one of the things I sort of was clear on early that I didn't like the way positive news articles about me made me feel, because they naturally make you feel good, and I was able to work out that when the negative articles came, I was going to feel bad, and I didn't really want to hand over that control over my emotions to a media organisation whose job it is to sell newspapers, in that situation, the West Australian. So I decided to avoid not just that newspaper, but all newspapers and news and football-related stories, so I could really narrow the focus on what I needed to do. And a part of that process was buying the Fin Review each day, so I had something to read in the mornings. And initially, when I was reading that, there would be a chunk of terms each day that I wasn't 100% clear on, and 12 months later, there were a few of those terms that I wasn't clear on, and fast forward 5 or 6 years later, and a lot of the content felt like it was a bit backwards looking, and I was ready for some more sophisticated content. So that was a bit of the journey into some education in markets, and then from the age of 18, when I had some expendable surplus savings, was investing in listed equities through Melbourne-based brokers. Missed one of the greatest commodity runs of all time at a time when I was living in Perth, and would have had access to all the brokers, particularly the West Coast following brokers. And back at a time when the Shell game was strong, and I mean, people just made out like made a mozza on that. So missed all that, and was buying sort of large cap stocks, things like
too conservative,
BHP and ANZ, and things where, as a private investor, you've got no edge whatsoever. And then when I was 28, I met a guy who was chairman of a broking firm in Perth. I was back in Melbourne at this stage, and he really taught me how to invest in small caps.
So it was once you were back?
It was once I was back, Met through a mutual friend at the time who I knew when I was in Perth. And really what he taught me was how to sell. Yep. If you buy a property well, you don't really have to sell it. Perhaps with some of the tax changes coming.
That'll change.
Maybe that'll be reviewed, particularly if you're living in Victoria. But micro cap investing to me is really about the selling. The buying is the easy part. When to sell and when to action, that is the challenging part. So he really taught me how to do that.
And I hope I'm not making this up, but everyone likes hearing about the wins and whatnot. But there's some I read or heard somewhere about GFC, you getting cleaned up. Is that? Got
smashed in the GFC. Yeah, was getting margin called when I was overseas. And have never loaned money for a stock since. Yep. And remember that feeling like it was yesterday, and just that feeling of being chased down by the market as the equity value reduces, and not just that, certain stocks which you were allowed to borrow against get taken off the borrow list. And so that was a really good lesson there. And learnt that, and yes, no longer take any leverage in equities.
Obviously, starting a career in Perth, moving back to Melbourne is probably a pretty good way of having a really strong blend in terms of networking, particularly in what you're looking to do today in Cerutty. But building a network in Perth, being exposed to some of more of the saucier end in terms of microcap stocks over there, and continuing that in Melbourne. Do you sort of look back at that fondly in terms of actually having the experience in Perth? And then blend back into Melbourne?
Yeah, really fondly, just for a number of reasons. It was a great time professionally as a footballer, but it did expose me to lots of different business people, and also give you an understanding of just how different the mindset is in the different states. And the appetite that people in WA have to risk
entrepreneurial
is just very different to what a lot of Melbourne and Sydney investors do. And neither's right or wrong, it's just different. I remember being at Diggers too, and the view last year when I went over to Diggers in Melbourne was that lithium was a bubble. And you fly over there and you listen to the WA people speak, and they just felt it was iron ore times take two, and they'd seen it before. And lithium prices look like they're going to come down and have come down off the highs, but they're still incredibly high.
Yeah.
And there are some similarities to what lithium's doing to what iron ore was doing in the early 2000s. So I would think just being understanding, and that's one of the things about investing is there is no right or wrong way to invest. There's lots of different ways to invest, and I think a bit of the key is finding a style that's suitable to your own temperament.
When you look back at your footy career, who do you think, outside of that, has been the biggest influence from a business perspective?
I mean, to be honest, probably the lessons that I learnt in football. I mean, it won't tell you how to build a spreadsheet, but there are lessons. Scattered across there around
discipline and whatnot.
Well, also what you're shooting for. I mean, if you want to be an outlier, you have to do something different, and you really understand that clearly in football. And you see teams that have a different game style and it works. They're usually the ones that win the flag, and then everyone jumps on board and they're following. That's following best practice, which in football is problematic because you never really get to the top by following best practice. You really need to create some IP along the way to make that jump. Now, what's also true is the people at the bottom end of the pile are outliers because they're doing something different as well, and that's not working. So it's just important understanding what you're shooting for, what's suited to your type of personality, and what type of investor/business person you want to be.
And in terms of, we'll get onto the fund in a second, but what sort of similarities do you see? You're just talking about it then, but around footy, preparing for footy and preparing for investing and funds.
Oh, I think the amount of time as a professional athlete you need to be non-human in a sense. So each weekend, as fans, we'll watch players out there on the field who've been jabbed up with local anaesthetic before the game, or have some sort of injury which a sedentary person would just find unbelievable that they're actually competing in a professional sport whilst carrying that injury. Yet they're willing to push through that barrier and tell themselves that that's what they want to do, and that's what the club needs. And, the outside returns in investing occur when you're outside consensus as well. And you're reading the front page of the paper, which is telling you to sell, and everything's going to hell in a handbasket. And that's more often than not the right time to buy. I think I saw a nice graph the other day around 12-month returns post markets in crisis shows on CNBC, and it's wildly positive, crazy. But when you're watching that markets in crisis show and there's flashing red all over the screen,
the
and
world's ending.
Kramer's got his sleeves rolled up higher than normal, and it doesn't feel like it's the right time to buy. So managing those sort of emotions and understanding that just because you're feeling something doesn't mean your actions need to accommodate those feelings. That's one of the lessons. You see a bit of a crossover between professional sport and investing.
Dovetails quite nicely into Cerutty Macro Fund. First of all, why the name? Why Cerutty?
So I was a big Percy Cerutty fan. So Percy Cerutty was Herb Elliott's athletics coach. He was late to athletics coaching. He was really ill in his 30s and almost died, and then took up running and was obsessive about diet. Thought that white flour was the enemy, and processed sugar was also the enemy. And this is, you're talking sort of the 50s and 60s, at a time when this was very much non-consensus views. Was doing he used to do crazy sort of 100K runs and was doing marathons even into his 70s and pissed off when he wasn't getting PBs. So he was a first principle thinker, able to commit to his chosen profession, was late to his chosen profession, and was able to put up with more pain than most. And Cerutty plans on being unashamedly more volatile than many Australian funds that are skilled and looking to manage that month-to-month performance, whereas Cerutty's really looking to take a longer-term view and, if anything, embrace the natural volatility of markets.
Yeah. And I know you talk about, in terms of Cerutty, sort of bottom-up macro and sort of business cycles and whatnot. Can you just give us a bit of a 101 pitch on Cerutty and how it's really going to sort of, you talked about going against the grain a little bit and embracing volatility, but how it differs from, there's 100 other.
Yeah, so I mean, we call ourselves a macro fund, which to some people they find that misleading because we don't invest in direct commodities or currencies like most macro funds do. That speaks to where our idea generation comes from, and it comes from top-down macro themes that are really long-term and secular in nature. The bottom-up analysis is greatly assisted by Tom, who's been with me for 3 years as an analyst and really excels in that area. But I think what separates us is the analysis of market liquidity and how that differentiates how much risk we put on. So, how the mental model you might use is that race car drivers don't drive the same speed all the way around the race car. When they're on a straight, they put the pedal to the floor. When they're coming up to a sharp turn, they slow right down. And that's really how we view markets, in a sense that when liquidity is high, and you can measure that, there's various metrics you can use, whether it's things like money supply or central bank balance sheets, or central bank balance sheets less the TGA, which is the US's government's checking account, and reverse repo accounts, all these sorts of metrics, but put them in one bucket and say market liquidity. When that's increasing heavily, we want to really scale up our risk and even be in positions that are often illiquid. And when liquidity is low like it is now, then we want to be in larger sized companies that are more liquid. Or if we are in small companies, we want them to be producing a lot of cash today, because in illiquid environments, cash today is more valuable than a promise of cash tomorrow. And we've all lived through markets, think 2021, where there was huge liquidity sloshing around, and the stocks that did best there were just whichever had the best story.
Grow at any rate.
Yeah, your low PE stocks were getting smashed. So it's a really broad, flexible mandate, deliberately so, because we want to be able to perform well in whatever different market environments.
Yeah, that makes complete sense. And in terms of how a sort of usual day or week would look like with your partner Tom and yourself, is it getting up early, going through the markets? Does Tom give you a download of what's happened from bottom up perspective overnight? How does that sort of look?
Yeah, so I spend most of my time on the macro and liquidity side of the equation, and a chunk in the bottom up as well. And Tom really zeroes in on the bottom up. So usually there'll be a theme that we want to invest in. I'll give Tom a list of 2 or 3 companies that I've done a scan on that I like that fit that theme, and then he'll build a financial model on them and compare relatively which ones he likes better. And then we spend a lot of time meeting management, talking to brokers as well, really trying to marry up sort of that micro with the macro themes that we like.
And in terms of getting an edge, particularly in terms of the micro cap space, obviously a number of stocks aren't covered and whatnot, particularly if you're early there. How do you get sort of access to those deals? Is it through the network that you've built over the years, or is it using a profile? How do you sort of look at that?
The big part of it is just knowing the backstreets of who's who in the zoo, if you like. We've been investing in micro caps in Australia. Well, I've been doing it full time now for 6 years, but even for much longer than that on a part-time basis. So to have accounts with 20 odd brokers and not only know them, but know who their strong relationships are, when they're placing stocks to different funds or close associates, what that potentially means, really understanding those things.
Taking the deals that people want, not taking the ones that people don't want.
Yeah, that's right. So, it's an eclectic mix, and often it's more of an art form than a science, whether it's dealing with you guys here at NWR or the different broking houses or just different private investors that we know. We feel that's a real edge as well, and particularly in different markets where there is more liquidity, being able to be in those under-researched stocks are often where they can give you a greater ability to outperform.
And you've got, through Chris Judd Invest, talk your book, and masters of the market. I think I was looking last night. You've done 150 episodes over the last 2 or 3 years, which is a number of Australia's leading minds. What sort of insights has that allowed you? And it's obviously got to be some sort of advantage there in terms of being able to speak directly to some of those guys.
It fills out the network well. So I mentioned the broker network, which I felt had been really strong for a while. A few years ago, I felt it was be good to fill out the fund network and the access to different funds that I had. And Talkie Books really filled that void. It's given me an excuse and a valid reason to ring up, any fund manager I want, really. And most of them are pretty keen to come on and have a chat. They've got businesses of their own that they want to sell, and they're usually really competent speakers. So it feels like it's
a win-win.
It feels a nice PR need for the fund, and for me, it forces me to look at a stock that I may not have been interested in looking at previously. As an investor, you can get I won't say bogged down, but you'll have things that you like in any one period, and it's easy to just keep looking at things that resemble that. So at least one stock a week for Talkie Book forces me to come out of that own echo chamber that Tom and I may have, and to look at investing landscape through a different lens, and then see how other people invest and how they're viewing markets. So it's been good fun. It's we'll keep doing it at least for another year, and see how it's playing out next year.
And you talked to Diggers earlier. First year that you've ever been?
It was, first year. I really enjoyed it. I thought it was great.
Just probably for a bit of background in terms of what Diggers is.
So Diggers and Dealers is a mining conference.
Yeah.
From all reports, it sounded like it was quite wild in the 90s, and that's sort of most people's view of Diggers, but I didn't see any of that at all, to be honest. But it was good. You've got most mining companies listed on the ASX in the one spot for a best part of a week. They've got booths where you can go up to them and ask them any questions. You've got they also present on the stage, but it's also the incidental meetings you have around the place where, living in Melbourne, it was just so efficient for us because we had so many companies we were invested in that we could meet in 1 week. Some of those companies, some of them will come to Melbourne once a year. Some of them might not, even some of the small ones. So just that ability to get some face time there, it was just highly efficient for an East Coast investor.
There's nothing like catching up with particularly mining CEOs over a beer, where the facade comes off a little bit and you get not insider trading, but just a little bit of an edge in terms of how they're sort of looking at different things, and also probably more so in terms of what their personality is like if you still want to be invested with those sort of guys as well.
I think there is just a lot you can pick up from body language that you just don't get on Zoom.
Yeah.
If they're sitting there with their CFO, you can see how they talk to them and how they treat them and how inclusive they are. When they make a big statement, you can see if they're touching their face or, committing to body language, which makes you wonder if they're really confident they're going to achieve what they say. So, we love face-to-face meetings. We don't think there's any substitute.
No, and in terms of you're probably going back to Diggers or depending on what you're sort of looking at, is there a couple of commodities or a couple of stocks that you're reasonably keen on at the moment?
We'll stick with larger cap companies, considering the fund will be live soon and potentially be looking to add to some smaller positions, and know how widely followed this podcast is, and we'll be pushing up the price. But no, look. In terms of what we think is ready to go now, we think gold's in an interesting place. We think uranium's in an interesting place now, and we think defence stocks. There's other stocks and other sectors we're in. Some things like copper, we could see it being a bit of a painful trade for a few months before we come out the other side of, potential US recession. But we like that on a longer term basis. But in terms of things we think are ready to go soon, I'd probably put defence, which has already had a strong run, gold and uranium in that basket.
And in terms of the fund, I know you've sort of spoken about somewhat of the short-term challenges in terms of the market. Even spoke about it on Triple M. I think I heard you say you lost a few listeners as soon as you started to talk intellectual chatter on there, which I thought was quite funny. But how do you sort of look at that as a fund that's just about to launch? And I know you spoke about it at lunch. You meant to talk up the market and we're really bullish and all the rest of it. But you are pitching this more sort of longer-term gain, that it's not, we want to hit the ground running and knock it out of the park in 3 months and get a whole bunch more money and and then all of a sudden, dust it. So how do you sort of balance that in terms of pitching to investors, but also, you got to come along the journey, and we're not going to necessarily be fully invested or going, really hard bullish on the market from the get-go.
That was one of the challenges we've had at the start when I've got several friends who've got their own funds, and then the message from them was you've got to be bullish when you start a fund so that people invest. And from our perspective, we find it hard enough to make sense when you're talking about markets, when you're being honest, let alone if you're trying to dress up a story. And we're generally optimistic people and optimistic investors, but just in the near term, we think there is a lot of uncertainty around, and there's a huge amount of debt that's got to be issued in the US, a lot of it in a hurry. And we've got a slow-moving credit crunch happening in the US banking system as money moves from deposits into money market funds, which are obviously giving capital a much greater interest rate. And it's a very rational thing to do. And whilst that is happening and continues to happening, availability of credit in the US is going to get harder and harder to get, which really drives the economy. So it's not going to last forever. Liquidity will come back. There's $2.2 trillion sitting in reverse repo that could be incentivized to come into treasuries. There's lots of other levers to pull, and levers that are forecast are being pulled around bond buybacks in the US in 24. So we see liquidity being positive on the horizon. We just think there's a few months to get through before that potentially plays out, and we're conscious of that. So there's no use trying to lie around how we're seeing markets, because that's how we're seeing them.
And you're also going to get found out in terms of the monthly reports as well, in terms of
that's
we're
right.
not fully invested in.
So we get stuff wrong. So we have the ability to be in 50%, go to 50% cash. We don't plan on being that once we've started and allocated initial positions, but we expect to be around 25 to 30% cash at the start, which is really high and higher than we'd like to be. But we still will be investing plenty of things, because we can't time markets perfectly either. But we certainly know when liquidity does rib, and we think it will at a time. And we think we're in an environment where we're going to see whipsaw type markets, just by the nature of how much debt is in the system, that when we do get asset prices dropping, or if we do get deflation, that the system's not going to be able to withstand that for a long.
Yeah, that makes sense. And in terms of AFL footballers, and we spoke with Grant Hackett last time, transition from professional career, having your identity only related as being a Brownlow medalist, and I know that you probably get it as well in terms of what would Chris Judd know about investing. What sort of advice would you give to probably more specifically AFL footballers in terms of you can do your knee and your career's up at any one time, or you can play for Pendlebury, could play for another 3 years as well, sort of thing. But in terms of setting yourself up and having that sort of grounding and introduction to investing, would you change anything in the way that you did it? Probably not, because you've been fortunate. No,
I think the advice I give to anyone around careers is I just see a lot of people doing stuff they're not necessarily all that suited to. And I would see that with AFL players too, that they were good enough to get drafted, but they weren't suited to it. And it's a really hard road, whatever vocation you end up in, if it's not suited to you. And so it took me a while to find investing and be clear that's what I wanted to do, but I'm really fortunate and lucky I did. Initially, the people I admired most in business when I was playing were entrepreneurs, and I thought, starting an operating business with a lot of people was the right path for me, and I just don't think it would have been. The idea of managing a ton of people. It's really not suited to what I'm good at or what I enjoy, whereas I love ideas and love exploring ideas in depth. And so then that's the type of investor I've become too. Like, I'm not hugging a benchmark, trying to make different trades every single day. It's about exploring longer term ideas and companies that can be suited to that, and then withstanding the volatility. And historically in the past, I've been able to withstand those challenges from professional sport. There's no guarantee you'll be able to do it in a different field, but psychologically, I think I'm suited to that. And generally, I feel more comfortable when I'm not in a consensus trade, whether that's as an athlete or as an investor. So the type of investor I've set up myself to become, I feel is aligned to what my personality traits are, and I think that helps. And it's sort of interesting point in terms of when you talk about not managing a whole bunch of people, you were captain at 2 clubs. Does that sort of come natural to you, or were you more of I just want to do it myself and lead by example, or did you sort of have to force yourself in terms of leadership? Yeah, no, it didn't come naturally. No, so it was something that had to be worked on, and so there were certain groups that I felt I was more suited to leading in the end. I think extroverts are better led by introverts and vice versa because the extrovert admires the characteristics of the introvert that they don't have and vice versa.
Push and pull, yeah.
So, but certainly that idea around, extra responsibility and was something that didn't come naturally at all. It was a huge privilege and something I really enjoyed, but it wasn't a natural part of my personality, and really born out of necessity of the situations I was facing. West Coast, Ben Cousins was the captain and got expelled for jumping in a river and doing a small biathlon as he was running away from a booze bus, and it was clear that was untenable, and someone had to do it. And initially none of us wanted to do it, and then it felt like the right thing to do. And Carlton's situation was a bit similar. There was no captain in place when I got there, and it felt like it was the right thing to do. So they were both very fortunate positions to be in, but certainly not natural ones.
And just when you talk about West Coast, Carlton, I'm not sure I've heard you talk to this, but I think at the time you were adamant that West Coast had to get a fair deal. Obviously, Josh Kennedy went there. Looking back on that now, do you sort of wish you didn't drive as hard of a bargain in terms of, you might have been able to keep someone like Josh Kennedy at Carlton and help you 5 years later?
Oh, it would have been great to play with Josh. Yeah, but that wasn't me driving the bargain. That was West Coast.
Yeah. Okay.
I had enough on my plate without actually working out who was going to be involved in the trade. That was above my pay grade at the time.
So it wasn't that, that sort of public message or was that more PR in terms of you saying, I want to make sure that West Coast looked after?
Yeah, it would have been true, but I certainly wasn't saying you've got to give this up to West Coast. It was like, of course. I don't
want to completely
who wants a deal where anyone gets ripped off? Yeah. Long term, it's just in no one's best interest. But I wasn't sort of guiding the club on what that meant or what that looked like.
Yeah. And just to finish with a few footy questions, can't not ask, but sort of one word answers. Best player you played with?
Dean Cox.
Coxie. Best player against?
Oh, can I give two or just one?
Two's fine.
I'll go Ablett Jr. and Buddy.
Nice. Best coach?
John Worsfold.
Yeah. You're allowed to go with one former West Coast teammate. Who would it be?
Go out?
Yeah, go out on whether it's dinner or...
maybe Andrew Embley, probably. Andrew Embley for dinner, as long as dinner ended at a reasonable hour.
Is there someone in footy that's outside the market that you think could sort of fit the market and have the work ethic and willingness to learn that you'd employ them?
Oh, lots. Daniel Tarley has left now, but Daniel Tarley's a bit of a star. He's gone into property. But I used to speak to him a little bit. I thought he was a gun.
Smart unit. Best broker, worst broker? No, we'll pass on that one. We'll leave that.
We did have a mutual broker who's won the the Chris Judd Invest Broker of the Year Award 3 years running, so he'll know who he is if he hears this. And we were talking about one of his admin staff earlier, so you'll know who it is too.
Doesn't need a big
doesn't need a big. That's right.
And just in terms of why did you get out of media, footy media?
It was time to specialise on one thing. I left footy and was still working out what I wanted to do, and also it was such an abrupt end that I did no footy for a year and just felt I was really missing it. And so to dip my toe in a little bit of footy through media, whilst not committing to it, full time, if you like.
Yeah.
That was sort of that nice conduit as I worked my way out and started building the interest, and a lot of them, really, really based around investing.
And probably final question, just in terms of your thoughts on the footy media versus the business media, how do you sort of look at that, particularly around stocks and you talked about, scrutiny before, but how do you sort of, compare the two?
Footy media is brutal, really, and just becomes so negative.
Crips.
Over a longer period of time. And so I wonder if that's the media or if that's what people want to consume. I'm not sure. For me, I just find it incredibly boring. I've got no interest.
People just getting ripped down.
Yeah, I either want it to be funny or I just want to hear about the players as players. But this constant rush to try and expose them as average people when they're just not. They're young kids generally with almost zero life experience outside of footy, trying to make their way and work out where they fit, and they work. Problem is, they all work really hard, because it's a relative game. Even
the
players down
media or the footy players,
the players,
yeah.
They're all working their backsides off. They're sore as boils, and problem is sometimes when you're at the bottom of the ladder,
you get exposed.
Yeah, there's other things your club isn't doing as well, but the players are vulnerable in a lot of the times with that as a result of other decisions made by clubs. So I feel for players. I live through it. I think the best thing for players to do is avoid it and
read the fin.
I think so. And I guess the market eventually, if other people think like that, the market will eventually turn. I mean, the Sunday Footy Show, I reckon, is a great show.
Yeah.
Because you get footy,
bit of
and it's
banter.
good humour.
Yeah.
And they're generally trying to make the players look good.
Yeah. Well wishes.
They're not veering into politics.
Yeah.
I mean, that's what I'm interested in. So I think the market will eventually say what people want to watch, and that's where the media will go. But at the minute, I think it's pretty over the top, and I find it just really boring.
Yeah. And just very final question, in terms of what you do, keeping yourself busy, you got 3 or 4 kids?
4 kids.
4, that's a lot of kids. But just in terms of fitness...
Unless you know something I don't.
No.
Pretty sure they're all mine.
No comment. But in terms of fitness and how you fit it all in, how do you sort of, do you feel like, Grant Hackett talked about, the busier he gets, the more productive he gets. How do you sort of look at that and scheduling it all in?
I feel life's very busy. I get up early. And
what's early?
I get up 5:30, do some exercise and reading.
Yeah.
So I feel that by the time the kids are up, I'm sort of on top of what's happening in markets, and I've exercised, and then the rest can sort of flow from there.
Yeah.
But if I don't get up then, I won't exercise. And
Yep.
if I won't exercise, I'll eventually become grumpy. And that's not good for anyone, either professionally or personally.
Yep.
So, like all things, I don't have any secret answers. Trying to prioritise and get the big things right. And if you miss on some of the small things, so be it. But usually if the big things are going well, things are flowing
Flows
okay.
into it. That makes a lot of sense. Thanks so much for coming on. Really greatly appreciate it. And if you want to know more around Cerutty, Cerutty Macro Fund .com.au, and one to watch, and looking forward to being part of the journey.
Thanks
so
mate.
much.
Thanks, Simon.